Hi, I'm Debi Peverill, and this is our annual video on how to fill in the TD1 form. This particular video is about the federal form. There are also videos about two of the provincial forms, the Nova Scotia one, where I live, and Ontario, where we were asked to do a video on that. So the purpose of the TD1 form is for your employer to take the correct amount of income tax from your paycheck. This is not your tax return. And although there's a lot of things on the TD1 form which have to do with your personal income tax return, claiming it on the TD1 form isn't the same as claiming it on your tax return. So, as I go through the various boxes that you need to fill in, remember that if you make a mistake in this TD1 form, it doesn't affect your amount of taxes you're going to pay. It only affects the amount of taxes your employer is going to take from your pay. So if you get the correct amounts on your TD1 form and your employer does things properly, then in theory you don't owe any additional income tax when you file your tax return. If the TD1 form isn't done correctly, it's possible then you could get a bigger refund because you failed to take some things into account on the form, or that you could owe money because you put things on the form that don't actually apply in your tax return. So, again, this form is only to give to your employer so the right amount of income tax can come off of your paycheck. Okay, so it's a two-page form. If you take a look at it from the top down, first part's pretty easy. Last name, first name, you need your birth date, you need your address, including your postal code, and a social insurance number. All of that should be fairly straightforward. Then the straightforward part goes away. Box 1 is your basic personal amount. And this is a different number depending on how much money you make. Lots of confusion around box 1. The number for 2023 is $15,000. That is the amount that you should put in box 1 unless you make an income greater than $165,430 during 2023. In that case, you are not entitled to the full $15,000 personal exemption. Okay? But for all of you that don't make more than the $165,000 number, the amount you put in box 1 is $15,000. There's a worksheet for people who make over 165, which we'll talk about at the end of the video. So if you are a single person who has no dependents, you're not over the age of 65, you don't get pension, and you don't have tuition, you're done with this form. Box 1 is the only box you need to fill in. You fill in the $15,000, you carry that number down to the bottom of this page, and we'll talk about what's on the back of the page, but if you only have one employer, there's nothing on the back of the page that you need to worry about, so you could be done. The other boxes. Box 2. This is the Canada Caregiver amount. If you have a child who is considered to be infirm and is under the age of 18, now you can consider someone to be infirm even if they don't get the disability tax credit. So it's not well defined in the Act, but if there is a child who needs more support than average, then very likely you're entitled to take this deduction. So the way it works is the amount that you're going to claim is $2,499 per child, per infirm child. You put that on box 2. The age amount, if you're 65 years of age or older, then you can fill in an amount in box 3. However, this is what we call income tested. So there are numbers that you need to know. In 23, if you earn more than $42,235, then you're not going to get the full age credit. If your income is under the $42,235, then you're going to get the full amount, which is $8,396. If your income is between the $42,000 number and $98,309, you can prorate the amount that you're going to claim. If your income is over $98,309, no claim can be made on your TD1 form or on your income tax return. So the age amount really only applies to people whose income is under $42,235. Any amounts over that and the deduction is reduced. Pension income. If you receive pension income other than CPP, Old Age Security, or the Guaranteed Income Supplement, then you're entitled to a $2,000 deduction. And it has been $2,000 forever. I'm sure it's more than 30 years. So that one never changes. Box 5. Do you personally go to school post-secondary? So something after high school that you pay money for. If you paid more than $100, then the amount of the tuition you paid can be put in this box, box 5, and it will then reduce the amount of tax that your employer is going to take from you. Box 6, the disability tax credit. This amount is $9,428. You are only able to claim the disability tax credit if you have applied for it and CRA has agreed that your claim is valid. So if you haven't sent any forms to the government, you shouldn't put it on your TD1 form. You could, if you feel that you have a disability claim, do the forms, send it in, and you will get the credit if you're eligible. So not putting it on the TD1 form doesn't mean you're never going to get it. Box 7, spouse or common law partner. So this applies if you have a spouse, someone to whom you are legally married, or a common law partner, can be either gender, and that person doesn't earn any income. Then you're entitled to take a $15,000 credit for that person. Right? If they do earn some income, then you have to subtract their income from this credit, essentially. And there's a form for doing that. But the full credit is available if you are supporting a spouse who does not have any income. The next one down is the eligible dependent. And I get more questions about this than any other box on the form. So if you have a child, but you do not have a spouse, then you can claim a child as your equivalent to spouse deduction. Okay? So it only applies if you don't have a spouse, and it only applies to one child. And the reason for that, of course, is if you had a spouse in Canada, you can only have one spouse. So you can only have one child who is an equivalent to the spouse. If you have other children, there's no deduction under the Tax Act for that. There's only this equivalent to married deduction for people who have a child but not a spouse. And that works the same way as it does for the spouse. You can claim $15,000 if your eligible dependent, who is your child, doesn't have any income. Then you're able to claim the full $15,000. If they do have income, then this deduction is reduced by the amount of their income. Okay, so what's next? Box 9. These caregiver amounts, they are confusing. If you have a spouse who is infirm, okay, I'm not talking disability tax credit, but they could also have the disability tax credit. So your spouse is infirm, you're able to claim the credit for them, provided they live with you, and that's based on their income as well. Same idea. The box 10 is for a caregiver amount for someone who is not a spouse. So if you have an eligible dependent who is infirm and is living with you and you're supporting them, then there's another deduction for that, subject to whatever income they're earning. So if any of these infirm dependents have an income over $15,000, you're not going to get a deduction for them on your tax return, so you shouldn't put them on the TD1 form. Box 11, amounts transferred from your spouse or common law partner. So if your spouse is in school, so their tuition could be transferred to you, or if they have a disability tax credit and no income, then you could claim their disability tax credit. And if they're older, there's an age credit you could get as well. And the last box is amounts from a dependent. So those of us who have put children through post-secondary school, there's a tuition transfer. It's only $5,000 a year, but that amount is transferred from the child who does not need it to reduce their income to the parent. And again, it's capped at $5,000, which has been a disappointment to many parents. So those are all the boxes. And again, a lot of it sounds complicated if you've got dependents and any of your dependents are infirm. But for people who have, no dependents, you don't need to worry about all those different boxes. So we add it all up and we get to box 13. Box 13 is the number that basically talks about what you have as deductions for the year. So that will reduce the amount of tax that your employer is going to take off. There's a very important box on the back of the form, which is more than one employer. So if you work for somebody, if you have two employers at the same time, you should only put your credits, all of what we just talked about, you should only put that on one form. The other employer who asks you for a TD1 form, you should fill in your name, address, social insurance number, and birth date, and then tick the back of the box that you have another employer. Because you're only able to claim these personal credits once. So having two employers doesn't mean you get to claim them twice. So one of your employers should not take your credits into account in order to figure out your income tax, or you're going to end up with a big tax bill come the end of the year. So if you have two employers at the same time, or if you work for somebody for part of the year and then you go to work for somebody else, make sure you tick this box, because again, you can't claim the credits twice. There's also information here on non-residents, which is beyond the scope of this video. A person who is a non-resident should talk to a tax advisor about their situation. You can ask for additional tax to be taken off. That is an amount. If you want to give your money to the government early and get it back in May, then you can certainly do that, and that amount would be put on this form. If you want to claim a reduction in tax, perhaps you've got some other losses or big RSP contributions or something, then there's a form, of course, for that. The form is the 1213 form, and you need to fill it in and file it with your employer, basically, who also has to get permission from CRA. You generally will have to fill in a provincial form as well. This is just the federal form, so based on whatever province you're in, there will be another form to fill in. So that's the whole form. A couple of things on the worksheet. The age amount. For those of you that are over 65, the way that works is the limit this year is the $42,335. You take your income, predicted, subtract the $42,335 from it. You multiply whatever you get when you do that subtraction by 15% and subtract it from $8,396. The worksheet's easier to follow. You just fill in the blanks. And whatever number you get there is your age credit. But if your income was over $98,308, you're not going to get any age deduction. The Caregiver worksheet is also a part of the package for the federal government. The base amount there is $26,782. You subtract your dependent's income from that number, and that gives you the maximum claim that you can make. Okay, and the maximum is $7,999. Same thing for either of the Caregiver worksheets. Okay, so that's your TD1 form. Hopefully you found that a little easier than going through it on your own. And if you have a provincial form to fill in for Nova Scotia or Ontario, we have another video on that.